Okay, so what I have in my hands are vintage pre-1921 U.S. Morgan silver dollar. This was the dollar currency from 1878 with this picture on it till 1904. Then they quit minting them for 17 years, and they made them again in 1921. Then they changed the design to the peace dollar until 1935, and then silver dollars went away. But this is a vintage coin minted right down the street at the New Orleans Mint. We're about a mile away from there. It's uncirculated, which means it was in a bag, so it's got a few scratches from hitting other coins in the bag, but it doesn't have any wear on it. It's only about $60 today, where an ounce of silver is $25. This is a vintage 1924 $20 St. Gaudens, minted during the Roaring '20s, one of those coins that I described in our interview going back, that went to Europe in trade payment back then. So this coin is slightly circulated. It doesn't warrant getting sent to an independent grading service like Numismatic Guarantee Corporation because its quality isn't high enough. It's got a little bit of wear on the high spots. It got used a little bit. We call it almost uncirculated. Now, if this coin were near gem quality, which is what MS64 is, it's worth sending to NGC to get certified because its value is higher. This is worth about $1,950 today, dealer-to-dealer trading or to the public, where this coin is worth about $2,200 today. So there's a $300 difference, $250 difference, which is why this coin warrants the grading certification. So this coin is actually 5 grades higher than this coin. This same coin, 2 grades higher in Mint State 66, is actually a superb gem, and its trading value today is about $3,200. So the known survivors in this condition are much fewer than this condition in Mint State 64. So that's what we look at: quality, independent certification, and then market price today. So their history you can hold in your hands, real history of a time when money was real money. What you have in your hands today is not money. It has no intrinsic value. It's currency. This was currency, and today we would just call it money, because money has intrinsic value of some kind. Oil could be money, but it's not really tradable like this is. I'm Dana Samuelson. I'm president of American Gold Exchange. We're a national mail order company based out of Austin, Texas. I started American Gold Exchange in 1998. After spending 18 years in the business, I got my start working in a vault, counting, shipping, and weighing in 1980 because I could be trusted. And I ended up getting a job 2 years later, actually in early 1983, with Jim Blanchard, who's the founder of the conference that we're at, the New Orleans Investment Conference, and the man responsible for private relegalization of gold ownership in 1974. And through my time with Jim, I got to know pretty much everybody in the industry. And when I thought I knew enough and had enough experience, that's when I started American Gold Exchange. So I'm also a member of the Professional Numismatics Guild, which is the leading organization of rare coin dealers in the country. To be a P&G member, you have to be invited. You can't just join. You have to have financial wherewithal. You have to be a member of good standing in the community, but you also have to agree to binding arbitration. So if you and I were ever to have a dispute over money or failure to deliver or whatever, you could go to the P&G and file a complaint, and then I would be pulled in front of a board of my peers who would hear both our sides and then make a judgment. And the job of the P&G is to be fair to the customers and the industry. So if I've done something untowards, whatever they've decided is the rectification of the problem, I would be responsible for that. Right? And so we self-police as a result. And this is our industry. This is our livelihood. So P&G members are among the most long-standing in the community, most experienced, and we tend to be the most ethical in an unregulated business where we have opportunists. I'm also a past president of the P&G, so I served on the board for 12 years, including being president for 2 years. During my presidency in 2016, we were presented with a problem of Chinese counterfeit merchandise coming in out of Asia
primarily through online auction platforms that I won't name, but you know who they are, and it's still a problem. And I helped to conceive of and establish our industry anti-counterfeiting task force, which today works with Homeland Security and Secret Service to interdict shipments of spurious merchandise coming into the country out of China and prosecuting individuals who are trading in it.
So the counterfeit items, was it Chinese designs, or was it American designs, or was it a little bit better?
Both. Both. They're counterfeiting a little bit of everything. Mostly they're doing bars, because bars are easier to replicate than sovereign minted coins. I don't see hardly any vintage gold coins being counterfeited. I've seen counterfeit bars. I've actually seen a counterfeit 𝙂𝙊𝙇𝙍, but it didn't fool me. I mean, it didn't look right.
Yeah.
So, but it would fool a novice, so you have to be careful there. But I've also done a huge business over the years in vintage pre-1933 U.S. gold coins.
Yes.
And I do a lot of trading, buying and selling in the $10 and $20 gold coins in particular, because they're more popular. They're just more popular than the smaller $2.5 and $5 gold coins or the $1 gold coins. But the numismatic market, or the collector coin market, is based on a couple of different factors, the valuations. First, there are how many were made back in the day. Number one, that's the starting point. But more importantly for value today is how many survive. And there are mintages where they might have made 1 million of something back in the 1920s, but today maybe only 50 or 100 we know survive for whatever reason.
So it's that rarity factor.
Right, so that adds scarcity or rarity. So we know survival rates today pretty well by how many coins the two top independent grading services, Professional Coin Grading Service, PCGS, and Numismatic Guarantee Corporation, or NGC, have graded since they started in 1986. Prior to 1986, an independent certification that was accepted by the dealer community at the time, if you had a coin that was graded, it was just my judgment. I say that this is a gem quality coin, or it's an uncirculated coin. And there was no, while the dealers were pretty consistent, there were opportunists that would come into the market and misrepresent. So the independent grading has taken the guessing game out of what quality a coin is. So on top of how many were made, we know how many survive today by the PCGS and NGC population reports.
So let's take an example of that. So you have some coins here that are mint state 65, 64, 63. So that is a grading scale for the quality of the coin, how much rub or wear, the gloss of the coin. So if you get one in one of these sleeves, that means it's been graded by usually one of those two entities, right?
Right. They house the coin in a sonically sealed holder that if you violate the holder, you can't put it back together, it breaks. And they're hard to break. And inside the holder is the coin's date, denomination, and mint mark, which every coin has, and then the condition. So the date, denomination, and mint mark are constant. The condition is the variable. And the condition is what determines value in the marketplace today. How many like survivors are there in that date, mint mark, condition, grade, or other, in the series. So we can tell some dates are more common than others by survival rates today. Some are rarer than others. Some have always been rare. There are other coins that have, a high mintage, but then an extremely high survival rate too, because they were perceived as special back in the day. So what we do is we look at all of these factors, and we have a very competitive buy-sell market in vintage U.S. gold coins that are certified by PCGS and NGC, using the same way you would evaluate houses, by comparables. So if there's 20,000 of these that survive, and 18,000 of these that survive, and then 4,000 of these that survive, everything else being equal, the two that have close to the same survival rate are going to be common and traded at an equitable price, where the one that there's significantly less will have a modest to maybe a more significant premium over the common dates, is what we would call that.
So can you explain for people who may be interested in buying a coin? I think we've talked about it's reliable when you see these gradings and rankings, and you can look up maybe how many survived and kind of get some of that data. What are people think that these have risk? They think that it is when people ask me about this, they're like, I'd rather buy bullion at the cheapest I can because I know what that price is and it's common everywhere. How hard is it to get information on these coins and really find that market?
Well, with the advent of the internet, it's actually very easy. You have to know where to look, So we just say do competitive shopping, but you can also look at auction records, which are a perfect free market reliability indicator of value.
Sort of like classic cars, like what?
Exactly.
Okay.
So we have auction records that go back, 20 years, and it's the more recent auctions are obviously more appropriate because the gold price goes up, it goes down, and has an underlying effect on the value of some of these. We go through different economic cycles, and sometimes they're just more popular than others. So we look at comparables and auction records, and you can find this information if you look for it. And the best thing to do is stay with P&G dealers, who are the most reliable, and do some competitive shopping, either by calling or looking at online pricing. And auction records are a great way to, especially for rare coins, auctions are really a way to use for value. For more common coins that are traded almost every day, because there are maybe 100,000 of this or 200,000 of that survive. We call that more of a generic market. And those prices are set by the dealers that buy and sell them. Okay, and there's 300-400 dealers that actively make buy-sell markets nationwide that are the top tier. And then there's a couple thousand underneath that what I would call a second tier level of dealers, like the mom and pop coin shops. Okay. But it's a very wide and deep market, much more wider and deeper than you would imagine, because it's not obvious to most people where it is.
I think that's the fear of most people. And so talk about what are some of the advantages or why people get into the numismatic coin market versus just buying a regular, gold eagle bullion coin.
Well, what the scarcer pre-1933 coins offer is exactly that, scarcity. On a given year, the U.S. Mint might make 1 million 1-ounce gold eagles. But for some of these vintage coins, we know that there's known survival rate for the entire series in a given grade might be 200,000 or 300,000. If for that coin's type, like a $20 Liberty, in Mint State 63 has a survival rate, if I remember correctly, of about 240,000 coins total for all dates and mint marks from 1907 down to 1877, which is what we would call the Type 3 denomination. Okay. So 233,000, that's how many gold eagles the U.S. Mint makes on a low year. And that's how many survived since PC Justice and NGC started grading these coins since 1986. So if there's only that many to go around, when 300,000 people all want one, the price is going to go up because there's not enough product to satisfy demand. Now, if only 500 people want one, the price will go down. But these coins tend to trade relative to their intrinsic gold value as well as their premium. Right. Over the collectible value, which can go up and down. And our company, American Gold Exchange, we publish price and premium charts on our website for the common dates, which we can track easily. Now, rare dates are a little bit different, but and we publish this on our website, which nobody else does. So you can look at the premiums relative to gold value and previous price records. Going back 20 years on our website.
That's a huge tool because a lot of what people do in real estate or stocks is, or even the bullion, they want to know the variability in price or the beta of that asset. Right. So on your website, we could go download the data into Excel and basically figure that out for ourselves.
No, you can't download it because it's not downloadable, but you can look at it. You can look at it and tell. Yeah, you can see.
Okay, good.
So we track this so we can make intelligent recommendations to our clients. And as you've seen, there are periods when demand is really strong and then periods when demand is really weak, and these premiums can fluctuate above and beyond their intrinsic gold value fluctuating. So for example, between 2003 and 2008, the gold price was steadily rising, and the coin market was pretty healthy because the economy hadn't gone into a big financial contraction yet. So premiums for all collectibles were pretty good. Then the crisis came, and for a couple months in 2009, there were no ounces of gold to be had from any of the mints because they were all run over. So the only gold you could physically buy were some of these vintage coins that survived, and the premiums really exploded. So some of these coins have 2009 price highs, where the premium was much, much higher than the intrinsic gold value. That cycle continued on through 2011, 12, 13 until the gold price corrected way back down. And when the economy is doing good, these are counter-cyclical. So they can weaken in price, which is what they did 2015, 16, 17, 18. The market premiums came down and contracted to the lowest I've ever seen in my 38-year career at that point in time. And that's when you said you got into the market because you saw low premiums. Since now we've gone through another opening or puffing up of values again because the gold price has taken off on the back of the COVID problem, but premiums had expanded back to 5 and 10 year averages where they were well below those just even 2 years ago. So the scarcity is what gives you leverage in the market, and it's a supply and demand driven market. So that's what creates the waxing and the waning of the premiums. Now the only source we have for these are what the market can offer us. The biggest raw source is what comes back from Europe, back in the United States today, because many of these bags of coins in the 20s in particular went over to Europe to pay for trade deficits.
France, especially.
France and Russia.
Saying we'll trade your devalued dollars.
Right. Well, after the financial crisis of 1929 hit, France didn't want paper dollars; they wanted gold. So a lot of our bags of $20 𝙂𝙊𝙇𝙑𝙀, the later date $20 gold coin, went to Europe in trade payments, where they've lived for decades while gold was illegal to own in the United States. But there was a caveat: the coins that had a 15% or higher value over their gold value back in 1933 were exempt from confiscation. But a lot of these were just gold coins based on their gold value.
And now they're the numismatics today.
Now they're the numismatics today because they're scarcer. So most everything trades at about 15% over gold. So they do have higher premiums than an ounce of gold, but they have vastly, multiples times scarcer. Right? With the PCGS and NGC independent certification, you get a constant in quality, which you couldn't get before. So there's a comfort level that novice investors can have with these coins. And it's competitively shopped market. If you just shop around from some of the bigger dealers, you can see where the market should be, right, versus what you might pay. And if you stick with reliable P&G dealers, you'll be treated well. So there's a lot of comfort that most people don't think exists in this market that really does. It really does.
Talk about American Gold Exchange. You don't deal just in numismatics. You have other products. What services do you offer to the public?
Well, we're a national mail order precious metals and vintage coin dealership. We stick with mainstream items. Our product line online is pretty small because you want to stay on the main road. We do a lot of business in U.S. gold eagles and silver eagles, Canadian gold and silver maple leafs, Austrian gold and silver philharmonics, and South African gold and silver Krugerrands. That's vanilla, chocolate, strawberry, and pistachio, if you like. I mean, they're all ice cream. It's just which flavor do you like. Now, some have certain advantages over others depending on what country you're in or what taxation laws are. But this is parsing. Okay, they're all good ounces of gold, so we deal with a lot of those. I do a big volume of vintage U.S. $10 and $20 gold coins, not really rare coins. These are what we call generic coins, where they're kind of a commodity as much as they are in the coin market. But we also do handle rare coins. We've actually placed some very fabulous rarities over the last couple of years with some of our clients. We placed the 1794 silver dollar, which is the first year the U.S. made silver dollars, and the survival rate's tiny. We've placed one of the top 10 known quality coins with one of our clients for a little bit over $1 million, and he was happy to get the coin. So we do that. I've been in the business 42 years, and there's almost no one in the business I haven't met over these years and don't have a good relationship with, and our reputation is spotless. That's all you really have in the long run in my business. And it is an opportunistic market right now, so you have to be careful who you pick to do business with. A year and a half ago, the CFTC actually came to me, and there was a company that was taking advantage of people through their IRAs and overpricing common bullion coins. And I helped the CFTC build a case that ended up closing that company, because it was the right thing to do.
Right.
Yeah.
That's
So
good to see that happen.
we're trying to give back and help, because what happens is people might get involved with the wrong company to do business with. Maybe they get mistreated, then they never come back to our industry again because they don't know who to trust.
Yeah, the integrity matters as far as the overall market. And also, I think bringing new people to market, the more integrity we have, I think you'll see more people come to it. One of the things that we're trying to do is get the younger crowd interested in gold and silver.
Right.
So my kids are in it. My daughter's an actress. And so a lot of the money that she earns through acting goes into gold and silver coins or jewelry through 𝙂𝙊𝙇 or those types of things.
Right, nice.
To,
I'm
to be in the
familiar with
industry.
𝙂𝙊𝙇. That's a good company.
Yeah, so you know, we try to get younger people into it to help, you know, that market, you know, progress, because we see a lot of the older folks retiring. They may either keeping them for a collection, they make them out in estate sales or whatever the case may be. So we need a new generation to kind of, you know, fill in that gap. And that's what we try to do, is just educate people on the value of this market. So I'm a big proponent of the numismatics in particular.
Well, I'm very glad that you're doing this, because you know, some of the younger people, maybe they can't afford an ounce of gold, but they can afford an ounce of silver, and that's a way to get started, right? And they, not only can you buy modern bullion coins, you can buy vintage silver dollars that are, you know, 100 years old for just not much more than an ounce of silver costs.
And have good historic value that you can teach a lesson to. If you're a parent, you want to teach a lesson about, you know, how silver and gold were money in our country at one time. It's a great way to do it.
Right, and our whole economic system from 1793 to 1933 was built on the gold standard.
It was.
And we stayed on the gold standard until 1971, when Nixon took us off of it. We just didn't have gold as currency. And now in the era of fiat money, you know, the gold price is free to trade, and it's gone from $40 an ounce all the way to $1,800 today, basically.
Best performing general asset class since 2000, beating all the major stock market indices, regular gold has, since 2000 to now.
That's correct.
So it's been a great investment.
Yeah, it can be a little lumpy. It's not always, year to year, it's not always a great thing, because it, you know, gold climbs a wall of worry, and there's some complacency right now in November, or it's October 2021, because we're having a pretty good GDP and coronavirus is getting damped down. But we've just taken on so much new debt that this is the Achilles heel, I think, of our dollar denominated system. And gold usually does pretty well when the dollar gets debased, which is what's happening, and also during periods of inflation, which we're going through now.
Yeah, we have both at the same time, and supply chain issues. I just kind of mix it all into one big pile.
Right, and so gold looks pretty good right now. Silver too.
Yeah.
So,
well, thank you so much. It's been Dana Samuelson, the president of American Gold Exchange. Appreciate your time.
my pleasure. Thank you. Appreciate it.
Yep. Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.